Hello Market Club members everywhere, Adam Hewison here coming to you from the digital studios of Market Club. We're looking at a very well-known stock, it's ORCL. I want to share with you some of the things that I see on this stock right now. First of all, we're going all the way back to the lows that were seen in the first quarter of 2009. That's when the bear market bottomed out and we had this prolonged bull market, which is going on for like 6 years now, very old in terms of bull market length and time. We've done something very important in ORCL, in my opinion, and that is we've broken below, you can see right here, this long-term trend line. Remember, we have to have 3 places where it touches, and there it is, perfect. And you've broken below it right now. Yesterday we had a signal to sell ORCL on our weekly charts, and you can see we're now below the 50 line again, indicating further weakness. Now to put on our Fibonacci retracement and see how far this stock can go on the downside. So we're going to click on our Fibonacci tool. Remember, the yellow box goes right here, meaning the tool is live. We'll click on the very high and we'll drag to the very low. And there you are. 61.8% retracement is 26.37. Could ORCL get there? Absolutely. 30.27 is definitely in the cards, but I think we could even get down to this lower level as things pick up. And if you just step this across the screen, you can see that this is where potentially the support will come in right here. So these previous lows, you can see how it bottomed out in 12 and also like in the March-April period. So again, this is where I think the market go. 26.37 ORCL. The trend is down. You've broken a long-term trend line, and we see further weakness in this market. Let's take a look at our next stock. This is Michael Kors, and this is going back all the way to when it first came on the big board. You can see how an amazing run up, very happy, up obviously up to $100. People, wow. And now we've had a 60% correction. Can it go further? Yes, I think it can. I think it can go all the way back to 25. I think people are going to pull back on even luxury brands such as Michael Kors. So if we get closer to this typical 3-month view and put our weeklies in, you can see that our monthly came in at $85. That's the trend started going down just 15% from the all-time high. It's been going down. Now prices are half that. And you can see there's our signal right there at 42.30. Currently trading at 41.78, quite easily down to the 37 level without too much of a trouble. We're below the 50 level. I think this market's going to go lower. If you do sell it, you want to put your stops just over the 45 level for now and let the market do what it wants to do. But these markets bear markets tend to pull you down. There's really no upside, just little blips you think it's going to turn. No, it's going to continue going down. We also have a minus 100 strong downtrend there. Our next stock is SanDisk. Here we are at SanDisk, minus 100. You can see we had a signal there yesterday at 51.34. It's 49.92 right now. Looking for a challenge of the recent lows here. But let's scan this out a little further, get a max. And again, you can see where this market also broke. Let's take all the triangles off for now and put a trend line in. You can see where this market also broke a long-term trend line. Again, this is very, very important. Markets should not do this if they're going to stay strong. This is going to be a pullback, I think, quite easily to the 30 level and possibly even lower. If we put our Fibonacci numbers in the green, remember, we click here, this becomes a Fibonacci retracement live tool from the highs all the way down. And you can see, I think we'll see a retest of the 44.38 level. So again, not so much, but nonetheless, not a lot of enthusiasm. I think we could actually go further than that because this is not a retracement. This is a bear market. Now you're broken below the trend line and you're below here, and plus all of our trade triangles, which you can see are clearly negative for this stock. Let's move on. This is the Dow Jones now. This Dow Jones will have a signal at 15,979. I'll write that down for you. 15,979. If the market goes below that level, it's going to accelerate on the downside. We're below the 50 line. Trade triangles, the daily, not so important, but the monthly is still there, and the weekly will turn red moving below this level, 15,979. Watch that carefully. Pretty much the same on the S&P 500. The level to watch there is 1,903. And you can see we're currently trading at 1914, just 11 points away. Watch it very, very carefully. We're also below the 50 line. That's a very negative thing to do. And let's see how that plays out. But again, we think this market's going to go lower. Same picture on the Nasdaq. Not quite so bearish, but nonetheless, the key thing to watch there is this number. I'll give you the number again. It's 4,614. That's the number to watch. If we go below that number, I don't think it'll do it today, but we could. It'll accelerate to the downside. Again, we're below the 50 line, another negative. This is all happening. Remember, people aren't going to be excited. It's Thursday. Tomorrow's the end of the week. Do they want to go home long stocks? I don't think so. Euro, a little bit choppy here. The weekly's still up. The daily turned down, but nonetheless, it looks like it's trying to build a base here and wants to go higher. So let's see how that plays out probably next week. Now, gold is interesting, as we said in our comments. The key thing to watch there is this level. Let me write that down for you. So we could get there today. It looks really interesting in my book. And the level we want to look at is $1,147. We're currently trading at $1,144, so only like $3 away. If we get there, you want to get into the gold market because it's going to turn everything around, especially this triangle here. And that's the one we use for trending gold. And I think that'll set the market up for a quick move up. Pay attention to the gold market. Last market is crude oil. This is sort of flattened out a little bit, a little disappointing. Nonetheless, it's flattened out. You're sort of in this box type formation right now and really not too much going on. Let's watch that carefully. Watch the trends. We are in a bear market in the major indices, and that's the important thing to remember. And watch gold. Things are going on in that market. Hey, I'm Adam Hewison from Market Club. Thank you for watching this video and every success. Stay strong and stay disciplined.